NVIDIA just revealed something that should terrify every tech investor. While everyone celebrates their $3.5 trillion market cap and AI dominance, Jensen Huang quietly admitted the real bottleneck is not chip design. It's the silver shortage threatening to collapse the entire AI infrastructure buildout. When the world's most valuable company can't secure basic materials needed for data centers, that's not a supply chain hiccup. That's the beginning of the AI revolution hitting geological reality. I'm about to show you why NVIDIA's AI empire depends on a metal most investors ignore, and why silver scarcity could stop the AI boom dead in its tracks. January 2026 delivered shocking revelations about AI infrastructure limits. Data centers now consume 70% of global memory production, with AI servers requiring exponentially more silver than traditional computing. NVIDIA's latest GPU clusters need 50 to 100 ounces of silver per server rack for electrical connections, thermal management, and power distribution systems. But here's what mainstream media won't tell you. NVIDIA is now competing directly with Apple, Tesla, and solar manufacturers for the same finite silver supplies. Every AI data center, every GPU cluster powering ChatGPT requires silver for components that have no substitute. Silver has the highest electrical conductivity of any element. When performance matters at AI scale, nothing else works. The mathematics are brutal. A single hyperscale AI data center consumes as much electricity as a small city, requiring massive silver-intensive infrastructure. Power distribution systems, thermal interface materials, high-frequency connections, all depend on silver's unique properties. NVIDIA's new liquid-cooled RTX PRO servers contain 8 GPUs per rack, with each rack requiring 75 to 120 ounces of silver content. Global AI infrastructure expansion demands silver at unprecedented scale. The International Energy Agency projects data center electricity demand will double by 2026, quadruple by 2030. Every new facility requires silver-intensive cooling systems, power management, and networking infrastructure. US and China alone consumed an estimated 350 million ounces for data centers in 2025, exceeding 50% of total mine production. Here's where NVIDIA's $2 trillion problem becomes existential threat. Silver mine production remains structurally stagnant at 844 million ounces annually, mostly as byproduct of zinc, lead, copper mining. You cannot simply open more silver mines when demand spikes. The metal has to come from somewhere, and increasingly that somewhere is depleting above-ground stockpiles. NVIDIA faces identical supply constraints as Apple and Tesla, but with exponentially higher stakes. AI servers require 10 to 15 times more silver than traditional servers due to advanced cooling, power density, and high-frequency data processing requirements. Each NVIDIA H100 GPU needs silver-based thermal interface materials to prevent overheating during intensive AI training workloads. The silver shortage hitting NVIDIA represents broader AI infrastructure crisis. Memory shortages already forced data centers to consume 70% of global chip production in 2026. Now silver scarcity threatens the physical infrastructure supporting those chips. Without adequate silver supplies, AI data centers cannot scale regardless of chip availability. Industrial silver demand has created permanent structural deficit. Solar panels consume 120 million ounces annually. EVs require 172 million ounces. Electronics manufacturing uses 400 plus million ounces. Combined industrial consumption approaches 700 plus million ounces, while total mine production stays at 844 million ounces maximum. NVIDIA's AI infrastructure buildout competes for remaining 144 million ounces alongside investment demand, jewelry production, medical applications, aerospace, and defense requirements. When AI data centers need 350 plus million ounces annually, basic mathematics shows impossible supply-demand imbalance. China's January 1st export restrictions compound NVIDIA's crisis exponentially. Most AI servers depend on Chinese silver refining and component manufacturing. Shanghai silver trades $10+ above London prices, while Chinese suppliers prioritize domestic AI infrastructure over international tech giants, including NVIDIA. Silver lease rates spike 200% annualized as desperate industrial users compete for guaranteed supply. NVIDIA reportedly securing multi-year silver contracts at massive premiums above spot prices. Physical delivery delays extend 10 to 12 weeks for confirmed orders, with some suppliers unable to guarantee availability at any price. The AI boom creates silver demand destruction across traditional industries. Electronics manufacturers cannot compete with AI infrastructure premiums, forcing production delays and design compromises. NVIDIA's deep pockets allow them to outbid smaller companies for critical materials, but even NVIDIA faces allocation limits. Memory chip shortages already threaten NVIDIA's GPU production timelines. DDR5 prices doubled in some segments, with Samsung raising server memory prices 30 to 60%. Now silver shortages threaten the physical infrastructure needed to deploy those chips in working AI systems. NVIDIA's power density roadmap requires exponentially more silver per computing unit. Jensen Huang announced 120 kilowatt server racks by 2025, with plans reaching 600 kilowatts by 2027. Higher power density demands advanced silver-based thermal solutions, electrical connections, and power distribution systems. Each NVIDIA DGX system contains thousands of silver contacts, connections, and thermal interfaces, multiplied by millions of planned AI servers globally, and silver consumption exceeds available supply within 2 to 3 years. No amount of efficiency improvements can overcome the fundamental physics of electrical conductivity. The silver crisis forces NVIDIA to choose between growth ambitions and material reality. Securing adequate silver supplies requires multi-year contracts at premium pricing, directly impacting profit margins on AI infrastructure sales. Alternative materials offer inferior performance, unacceptable for mission-critical AI applications. Tech giants building AI infrastructure face identical silver constraints simultaneously. Google, Microsoft, Amazon, Meta, all constructing massive data centers requiring silver-intensive components. Combined demand from hyperscalers overwhelms available supply, forcing allocation decisions that could delay AI deployment timelines. NVIDIA's competitive advantages in chip design become meaningless without adequate silver for supporting infrastructure. The company can produce the world's fastest AI processors, but if customers cannot build data centers due to silver shortages, chip demand collapses regardless of performance leadership. Historical precedent shows material constraints stopping technology advancement. 1970s oil embargo forced industrial pivots when energy costs exceeded profit thresholds. Silver crisis, following identical pattern. Essential material scarcity making existing business models uneconomical at scale. Silver recycling cannot bridge the supply-demand gap facing AI infrastructure. Electronic silver recovery rates below 20%, with most material locked in devices for decades. Unlike copper or aluminum, silver recycling requires complex processing that cannot scale quickly enough to meet immediate demand. NVIDIA's $2 trillion valuation assumes unlimited AI infrastructure scaling capability. But when silver scarcity limits data center construction, AI computing capacity faces hard physical constraints. Market valuations based on infinite growth assumptions become unsustainable when geological reality intervenes. Investment implications extend beyond NVIDIA stock performance. AI infrastructure costs rising dramatically as silver premiums compound throughout supply chains. Companies dependent on AI capabilities face permanent cost inflation as material scarcity forces pricing based on availability rather than competitive dynamics. The AI revolution hitting metal limitations reveals broader economic transition from abundance-based growth to scarcity-based constraints. Software scales infinitely, but hardware requires finite materials extracted from limited geological deposits. When material demand exceeds extraction capability, price adjustments become severe. NVIDIA's silver crisis signals fundamental shift in technology economics. Innovation constrained by material availability rather than engineering capability. The company that revolutionized computing now faces limits imposed by periodic table reality rather than competitive pressures. Physical silver becoming more valuable than AI chips when supply constraints make infrastructure impossible regardless of processor performance. NVIDIA's technological leadership meaningless if customers cannot deploy systems due to material shortages affecting supporting infrastructure. Silver, at current prices, reflects mathematical equilibrium between impossible industrial demand and finite geological supply. Further price increase is inevitable as AI infrastructure build-out accelerates, while mine production remains stagnant. NVIDIA's growth trajectory depends on securing materials that become scarcer each quarter. The AI boom revealing technology's dependence on mundane materials most investors ignore. While everyone focuses on software capabilities and chip performance, the physical foundation supporting AI requires silver-intensive infrastructure that cannot scale without adequate material supplies. NVIDIA's $2 trillion problem represents early stage of broader recognition that AI revolution faces geological limits rather than just technological challenges. When the world's leading AI company struggles with material constraints, entire industry must recalibrate growth expectations based on physical reality. Consumer AI applications face permanent cost inflation as silver scarcity drives infrastructure expenses higher. ChatGPT, Claude, Gemini. Every AI service depends on silver-intensive data centers that become more expensive to operate as material costs compound. Higher infrastructure costs translate to subscription price increases for end users. The silver shortage creating permanent competitive advantages for companies securing long-term supply contracts early. NVIDIA's ability to outbid competitors for guaranteed silver delivery determines data center construction capacity more than chip design superiority. AI infrastructure development entering allocation-based economics rather than price-competitive markets. Companies with secured silver supplies can build data centers while competitors face indefinite delays regardless of available capital or technical expertise. NVIDIA's engineering excellence becomes secondary when material availability determines deployment feasibility. The most advanced AI chips remain worthless if supporting infrastructure cannot be constructed due to silver supply constraints. Silver crisis forcing AI industry consolidation around companies with secured material supplies. Market dynamics shifting from innovation-driven competition to resource-constrained allocation. NVIDIA's $2 trillion valuation vulnerable to material reality as silver scarcity exposes growth assumptions. When geological constraints limit infrastructure, market capitalizations must adjust. The AI revolution discovering key difference between digital and physical requirements. Code replicates infinitely, but hardware demands finite raw material. NVIDIA's Silver Crisis preview of technology industry, confronting resource constraints that engineering cannot overcome. Physical laws impose limits. Jensen Huang's next earnings call will reveal whether NVIDIA acknowledges constraints. A silver shortage represents collision with reality.